How can you grow your business if you don't know where you are? Welcome to Number Compass, where we use numbers for direction and to reveal your next steps to growing your business. Hi, I'm Candus, and today we're going to be talking about profitability through job costing and understanding your numbers. Because if you don't know where you're at, how profitable your different products and services are, how can you scale your business, hire right, and stay in business, right? In the end, we all want to make profit because you have to make profit to be able to keep the doors open. If you're thinking, yes, that sounds just like something you want to learn more about, then you're in the right place. We're going to be talking about job costing and overhead today. And this is something I get asked often, especially when I'm teaching about the profit and loss. And if you've ever pulled one, you'll notice one, you need to know the beginning date and the end date. And then we go into the beginning. The first part of a profit and loss shows income. It is your primary way that you receive income, the products and services that you sell. And then right below that, if you're using what we call job costing, which could be things like labor, materials, supplies, anything that you're paying for that is what I explain as direct proportion. That's like an accounting way to say it. In other words, it increases the more that you provide your products and services, the higher that cost is. That is job costing. So when we're looking at the profit and loss, you go income, job costing, and that can be materials, it can be labor, either way. And then you get your gross profit margin. And that's really important because if you don't know if the amount of money that you're spending just to provide your product and service, not overhead, which we'll talk about in a moment, then if you don't know that number, you can't make decisions on if you're charging enough. I remember having a student in Commerce QuickBooks, and she was like, I just don't know if I'm charging enough for my products. So we went and we started looking at reports, and she's like, oh, now I know I'm struggling. And I've shared this before in the series, but it's so often it's like when you have the data, it's black and white. But when we're trying to make decisions from our mind, from our guess, from our best guess, it's not always clear. Okay. So job costing is what are the things that you are paying for that increase, whether that's materials specific for the job that you're working on, labor, hours, specifically the employee is working on that job, maybe subcontractors, people you're hiring for a specific job. Now, we are talking about it maybe in construction, but this can be for anything. If you provide a widget, it is what materials do you need to make it, right? So it's specific to whatever you are providing as a product or service. That is considered job costing, okay? Then we have overhead. And I think people just don't understand the difference. So hopefully you walk away learning that in this episode. Then we have overhead, which is going to be anything that is considered indirect. So remember, job costing means when I create this widget, this work, this product or service, our expenses increase. When we're talking overhead, they do not increase. So for example, like a supervisor, they may make the same salary no matter how much you sell. Or maybe the office staff doesn't change depending on how much you sell. Those are considered overhead or indirect costs. Some other examples of that would be maybe if you're buying supplies for your business, shop supplies or something else, but they're not for a specific job, they're just generalized supplies. Those are going to be considered overhead or indirect costs. Rent, utilities, insurance, property tax, the phone bill, right? They're always the same, or they don't vary depending on how much you sell. They may vary on the temperature outside or something like that. Utilities vary depending on the time of year. But overall, your telephone bill most likely does not change. Your rent does not change. So those are considered indirect costs. So I'm curious, is this something you knew the difference? Did you understand it? Because when we're looking at the profit and loss, as I mentioned before, you have income on the top, then you're going to have your cost of goods, the things that go up based off what you sell. You're going to get a gross profit margin. The benefit of a gross profit margin is you can look at industry standards. You can say, based off the type of business I'm in, what is the gross profit margin traditionally? And then you can say, what is the rest of my overhead? Those are the additional expenses. Those are traditional expenses in QuickBooks. That's the term expense. You're going to have a bottom line. Then you could have other income, other expense, and then you're going to have net profit at the bottom. And that is how much money went in, how much money went out, and were we profitable or not? And if it's a negative number, when you look at your profit and loss, it means you spent more money than you made. If it's a positive number, you had profit at the end. And that's the simplest way that I can explain it. Hopefully that made a lot of sense. What I want you to walk away with is considering this. Are you separating your cost of goods versus your overhead? Is your profit and loss designed this way? The answer is no. I'd highly recommend coming to our Customizing QuickBooks workshop if you haven't already saved your seat. at CandusCamper.com/class because I'm going to teach you this if you want to see it in actual real time. Pulling a profit and loss, looking at it, and going through what to be looking for, how to understand it. Okay. And then I also want you to think about, so often we only think about QuickBooks or bookkeeping at tax time. And this is where if you start looking at your job, so I'm talking about your profit and loss, you can pull what was the job cost on individual jobs, individual customers. Even if you're not in construction and you provide a product or service, just a service for someone, you can say, this is what we charge them. This is the expenses that we paid for it. And how much profit did we have at the end? Okay. We use this, as I shared in a previous episode, for my husband's hard flooring business, where we were doing work and we didn't realize at first that we weren't profitable. But what it allowed us to do was to adjust our pricing, which instead of working more, allowed him to work less, be more profitable, and give his body time to rest. Because hardwood flooring and maybe whatever industry you're in is really hard on the body. He needed a break. So that's how you can take this knowledge and implement it into your life and business. So this is what I recommend doing. Grab a profit and loss. If you don't know how to pull it, go to reports, company and financial profit and loss, and look at it and see what's happening. How easy is it to read? Are you looking at it based off your different products and services, your jobs? Did you know the difference between job costing, overhead? Hopefully it makes more sense. And you're starting to look at it through the lens of, how can I use this to help me make decisions? And if you do bookkeeping for someone else, how can I use this to help my clients understand what's really happening in their business? Because I will tell you, as a bookkeeper or a team member, if you work for someone else, starting to understand what you're entering so that when you give them a report, you can answer questions and actually know what's happening, because it will secure your job. I tell bookkeepers all the time. So often people come to me and they go, I wish my bookkeeper was someone who was a partner with me, somebody who saw my business the way I see it, somebody who has my back. And if you start customizing their QuickBooks in a way that gives this data, you'll notice your clients are going to love you. Because I will tell you, I hear people complaining when they said, this person, whether it's a bookkeeper, a tax professional, a team member, went in and started changing the reports and didn't communicate that with them. They hate it. So take this as a little reminder to, 1, look out for your clients. 2, if you do your own bookkeeping or you're a family-owned business, like, this could help you change the game on how profitable you are. Because in the end, that's what we want and need as a business. And that's a wrap on this episode of Number Compass, where we're talking about profit clarity and using job costing to help you take your business to the next level. If you enjoyed this episode or had any aha moments, let me know down below. Or you can email me at support@CandusCamper.com. And if you haven't already, make sure to register for our Customizing QuickBooks workshop, as I mentioned before, where I'm going to show you how to actually physically implement a lot of the things I've been sharing with you. You can save your seat for this free training at CandusCamper.com/class. Thanks for tuning in and using your numbers for direction or business. I'll see you in the next episode.